Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, October the 11th. The year's 2023. Let's talk trading. Trading stories we tell ourselves. Fobo. These videos are for educational purposes only. Your results may differ from mine. So you're probably wondering what is Fobo? Well, we know what FOMO is, fear of missing out. Fobo is fear of better option. And it's kind of closely related to FOMO, because what happens with Fobo is you think there's a better option. So it either causes you, A, to not take any action because you're thinking, oh, there might be something better. Or B, it causes you to jump ship, leave what you have to something else because you think it's a better option. And you can see Fobo in a trader's screen. When you see is so many indicators that you can barely see the price. I mean, obviously that's Fobo in play. Or you'll see people, traders fail to take an entry because they figure there might be a better one or might be a better trade, and they just sit there paralyzed. And this Fobo is definitely a trading story. I mean, I've been trading horizontal lines for pretty much over a decade. Yeah, I've got some other things that I do too, but most of it comes down to a horizontal line. Even the pivot point, you draw a line at the pivot. And I'm saying, if we haven't reached that point, chances are, on a daily or H4 basis, we got a pretty good chance price is going to hit that point. So from the open to the pivot, yeah, I'll trade that direction. Yeah, that's a story I tell myself, but it's based in statistics. But, the fear of better option, that unless you're running statistical analysis and you go, what, this new system has like an 86 percentile chance of this occurring versus the one I'm using only has a 66% chance. So yeah, so I might jump ship, but usually it's just it's a shiny object, this shiny object syndrome. We see this new indicator, it's like, ooh, that looks cool, ooh, and then you jump to it and then you wind up losing. But the thing is, and as Walmart likes to say, the method is probably the least important, even though I say, we got a three-legged stool, and that's one of the methods, one of the legs. So if you have a weak method, the stool's not going to stay up. But usually the weak method, you can find that, or the weak part of the stool, you can find out what's weak by looking in the mirror. It's you. Because you will do things that you shouldn't do. You will do things that, or you won't do things that you should do. Such as changing your lot size during the day. Now, I know there's a certain trader out there that did that yesterday. So yeah, I'm talking to you, but I'm talking to everybody. You should probably only change your lot size maybe once a week, maybe once a month, or as you hit a certain threshold, like maybe every time you increase your account by 50% or 100%, you then change your lot size. Because, trading in a way is a lot like lifting weights. You start out with a little, and then you keep doing the same move over and over again, and then you can increase the weight. But the actual move is the same. It's just now, over time, you've built up your muscles and you're stronger. So it's like trading. If you've got something where you can take steadily 5 to 10 pips a day in, day out, and rarely have a day where that doesn't happen, then that's all you need to do, is just keep doing that 5 to 10 pips. But as your account grows, you increase the lot size. You compound. Now, some people might want to compound daily, but the problem with that is, let's say you have 4 days in a row where you win and you're compounding. On that 5th day you compound, you lose. You're going to lose that much more that much quicker. So that's why I say, a week or a month, or when you hit a certain threshold. And out of the three, I would say it would probably be smartest when you hit the certain threshold. Because that way, hopefully you'll have enough room. So if something goes against you really bad, you can withstand it. So for example, if you have $1,000 account, maybe you trade $1 a pip. You could actually stand 100 pip loss or $100. That's only 10% of your account. You can recover from that. What you can't recover is if you were trading $5 a pip and you have 100 pip loss. That's 50% of your account. That's, you've got a long road to go to get that, because you have to double your account. So just keep that in mind. So once again, Fobo, F-O-B-O, fear of better option. Try not to get caught up in that, and try to recognize when you just might be doing it. So let's go ahead and let's take a look at some of these charts here. The monthly, we're 98 pips, now 97 above the monthly open. We've pulled back 60 off the high, and we bounced 241 off of that monthly low. For the week, we're up 78 pips, 79 pips across that weekly open, off the high by 59 or 60, and off the low by 115. And notice on Wednesday, we still have 1, 2, 3, 4 gaps that haven't filled. On the daily, you can see we are above the opening range for the week. We are above the opening range for the month, and we're above the opening range for the year. You can see how these are crossing over, or spilling. The ranges are spilling over into each other. And we're just 5.5 pips below the daily open, 13 off the low, 57 off the high. For the year, you can see we're 190 above that yearly open, 479 off the low, 861 off the high for the pound. And it looks like price is moving up at the moment. We broke out of that inside bar yesterday, and it continued up today, but now it's come back down. But yesterday, that would have been a nice trade had you taken that long. And that was a long in the launch pad. And the inside bars, you can see we've got a handful or more. Range, only 70 pips on the pound at the moment. And we've got 6 pairs over 100 pips. And just looking down here at the yen's sneaking back up to that 150 level, it looks like. And we're right back near that daily open. You can see we hit the short zone. It looks like price needs to break about 2267, 66 area for it to really drop like a rock. We've had 4 red H1s in a row here. Green rats, get ready to feast. The red rats have already feasted. We'll just have to see what happens here. We have not hit that pivot. Bambino flex indicator said to go up, so if you trade it long from the open, there was definitely a few times you made some pips. We have not hit today's pivot, and near the pivot the bias is long. Once again on H4, we haven't hit the current H4 pivot at 2306 or 07 here. You see we've got a missed pivot below, missed pivot from 89 H4 bars ago. Got a couple missed pivots at the downside here. You can see there's a whole bunch. We scrunched the chart, but that's on H4. On daily, we've only got 1, 2, 3, 4, 5 for the year. And today we've only missed by 5 pips, but a miss is still a miss. For the week, we've taken out the pivot. For the month, we have not taken out, we've missed the monthly pivot by 4 pips. In and out of this upper wick zone a few times. So once again, a couple of horizontal line trades. I like to tell myself this story about the wick zone, but you know, it closed out of the wick zone 73% of the time. It's gone through the top 52% of the time. It's gone through the bottom 43%. It's crisscrossed the bottom 24, crisscrossed the top 24 over the last 100 hours. So, yeah, this is a story I definitely like to tell myself. And, you know, fear of a better option. Like I said, out of the methods that I've come up with, the wick zone definitely has the best payout. But you have to trade it. I mean, you have to take those shorts and longs when you get the signal. And you have to take the pips when you can, because here, had you gone short, if you didn't take your pips and you just hung in there, you see you got a long signal, and people go, well, where do you put the stop? Well, in a small wick zone like this, only 7 pips, it's at the other end. It's like it's going to go out on one side or the other, or both, or neither, right? Well, chances are, if it gets in here, it's going to come out. It came in here, it came out. Came back in, came out. In and out, in and out, in and out, in and out. In and out. So, in and out both sides. In and out both sides. And that it just tells you right here with the stats. Okay. Oh, we got close to the ATR zone, only missed it by about 5 pips. Then you had a holo. And that, if you took that short, that was good for 44 pips at the moment, and up to probably 50 some if you took profit at that level. And you see here, price came down to the holo, the open low, and then came right back up, good for 9 pips at the moment. So, trade it from holo to holo. That wasn't bad. Pretty much a coast-to-coast type of trade. Okay, what did we have here? Oh, once again, this looks like wick zones. And then we got some inside bar trades here. Or rather, outside bar trading. And why I hit the wrong... So right here we had an outside bar break to the upside. Once again, story to tell. On this particular one, what do we have here? We got a flip-flop box, indicator 2. This looks like, coming off of a 3 ball, move to the upside. Body wick count, the highs and the lows here on the M1. Usually like to look at that at M30. See that long? We had news come out, long tail. Once again, you can see here it came and started crossing up through all those tails. Another story. Looking at price action on M1, M30, you can see we've got ranges over 10 pips. So definitely there's pips to be made there. Previous open, high, low. You can see here on M1 not much breakout, but on M30 you can see There is money to be made. Okay, fellow traders, just remember, no Fobo, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.